Silver could not regain broken support on several attempts. If it does not regain shortly, then further decline incoming. Silver hit hard overnight, down $1. Silver futures hit $57.10 before rebounding. Silver price is $56.90 per troy ounce. The silver market just flashed extreme volatility. Overnight drops, failed support recoveries, and massive global price dumps from London to New York. Analysts at Bloomberg say silver's next move could be $75 or $40. That's how unstable things are. And with 566 million paper ounces traded while physical inventories shrink, the pressure is reaching a breaking point. First, Rashad Hajiev shared something a lot of traders are watching closely. He noted, silver could not regain broken support on several attempts. If it does not regain shortly, then further decline incoming. And honestly, that's the kind of comment that reflects how fragile the price levels have been. Multiple attempts to reclaim support, and each failure increases the tension in the market. Then, Silver Trad reported, silver hit hard overnight, down $1. Silver futures hit $57.10 before rebounding after 4 massive smash attempts failed Wednesday. Cartel finally stalls silver's assault on $60. That's a dramatic couple of sentences, but the real point here is the intraday violence, $57.10, a rebound, and multiple failed pushdowns. This is exactly the volatility traders talk about. Next, Peter Spina added, silver prices taking a hit in New York today too after an attempted rally failure. Back to where we started off the week, initial support. The big one remains around $54 to $55 an ounce. I just added more at $56.50. Again, volatility. Failed rally, price coming back to early week support. And Peter pointing out the $54 to $55 range as the big one in his view. Then, Lobo Tigre highlighted comments from Mike McGlone of Bloomberg Intelligence. Silver's next move could be $75 or $40 because of its volatility, says Bloomberg's McGlone. He continues, the volatility in the silver market remains elevated as prices trade near their record highs above $58 an ounce. While the precious metal has room to move higher, one market strategist is urging investors to exercise caution, and McGlone wrote that silver's parabolic rally is a little scary. He explains that due to volatility, silver could realistically rally to $75 an ounce or fall back to $40 an ounce. That's a huge range, but it captures exactly how explosive and risky this environment can be.
Then Peter Spina added more. The volatility is high. Couple dollars a day, price swings? A simple sentence that tells the whole story. COMEX, liquidity and paper market talk. Kristen Shaughnessy reported JPM reportedly made 13.4 million ounces unavailable during CME shutdown. No metal left COMEX during Thanksgiving shutdown. This reclassification occurred amid a reported 10-hour trading halt at the CME due to a cooling system failure, CME letter. This ties into a bigger discussion happening across the community about how much silver is actually available in the system versus how much is being traded on paper. Supporting that idea, the Dude added, the silver market traded 566 million paper ounces yesterday. The COMEX had 672 deliveries, and the LBMA had 30. Did you see the 3 slam attempts yesterday? They are terrified of $60. What will today bring? I suspect we will stay flat today, and tomorrow will bring a move. Whether you agree or disagree with his take, the numbers he shares highlight the disconnect between physical metal and paper trading volume. Then Peter Spina again. London dumped the silver price again today. Let's see what New York does with it. This shows how different regional markets are impacting the price at different times of the day. Ratios and structural issues. Next, Gold Silver HQ shared gold silver price ratio 73 to 1, gold silver mining ratio 1 to 7, A big contrast and always a talking point in silver circles. Josh Philip Fair added, "There is a silver deficit. Yes, it means the world is consuming more silver than it's pulling from the ground. However, the deficit isn't cyclical, it's structural for the next decade. Annual deficits are 100 to 200 million ounces. Hard to find a better asset to own." He's emphasizing the idea of a long-term supply shortage, one of the most common bullish arguments around silver. Finally, Hansa Cherney stated, "SLV just turned into a silver vacuum. BlackRock grabbed 4.8 million new SLV shares, and JPM shoveled in 4.2 million ounces, approximately 130 tons. That metal isn't coming from COMEX, it's LBMA's free float getting eaten alive." This comment ties directly into the supply crunch narrative, pointing out where the physical inventory may be coming from.
And then we got a major update from Silvertrad, who posted COMEX Silver Futures December Delivery Update 12.4. Another 565 silver contracts stood for delivery Wednesday. It's only December 4th, and 50.5 million ounces of silver have already been removed from COMEX, nearly 50% of all COMEX free float silver. 50 million ounce vaporized in 4 days. Physical silver run on the bullion banks continues. BOA issued 401 delivery notices, and JP Morgan once again stopped the lion's share of contracts, 342 stopped by JPM. This update is huge because it highlights the aggressive physical demand hitting the system in just the first days of December. When nearly half the reported free float supply is spoken for this early, it adds another layer to the volatility and supply tension already gripping the market.
When you look at all these posts together, the failed support retests, the violent overnight swings, London and New York pushing the price around, SLV inflows, structural deficits, and a trading range that analysts say could be $40 or $75, one thing becomes crystal clear. This is one of the most unpredictable and reaction-driven silver markets in years. Whatever direction silver takes next, volatility is the headline. Disclaimer: this video is for news, commentary, and educational purposes only. Nothing in this video is financial advice, investment advice, or recommendation to buy or sell any asset. Always do your own research and consult a licensed financial professional before making any financial decisions.